We're going to be covering today the state pension in the UK. It's a hot topic at the moment. We've got quite a fair bit to cover. However, this webinar I've done several times before over the previous months. It usually takes about 30 minutes to go through things. Now, as this is really a subject that a lot of people are talking about tonight, we do have I think probably the largest number of attendees that we've ever had on one of these sessions. I think when I checked the number of registrants, well over 150. So there are a lot of people that have already submitted questions that they want to cover, and there's probably going to be more questions coming up during the session. So what we're going to do is we're going to be trying to cover as much as we can, and what we'll do within probably 24 to 48 hours after the session is reach out to everybody who's registered and arrange a one-to-one session with you to basically pick up from where we left off, cover things in a bit more detail for you and help you get this process started. Okay, now my name's James Mitchell. I'm a financial advisor here at Holborn Assets in Dubai, and I've been involved in helping people with state pension for a number of years. I'm a financial advisor, so it comes up quite a lot in conversation. And I actually I lived offshore since you know, like probably coming up 16 years now. And I remember when I first came out to the UAE and people were talking to me about, you know, topping up your state pension and paying your state pension contributions for overseas. I thought, well, why on earth would I want to do that? I'm overseas now. I don't have to pay tax. I don't have to pay national insurance. What on earth would be the benefit of doing that? So it wasn't until later when someone actually explained to me how much you need to pay that then I realized that this is really a no-brainer. So I'll hopefully demonstrate that to you today. I've been spreading the word about this for quite some time, and I've built this webinar hopefully to address a lot of the questions that people will have, but also to just give you a step-by-step process on what you need to do to progress this if you want to do it yourself. And if you need support with it, then we can help you with that too. So we're going to be covering just an introduction to, you know, who Holborn Assets are, who I am. I'll just give you a brief background. We'll talk about what is the state pension and what it's not. I'll cover the eligibility requirements and how you calculate how much your state pension will be, because your eligibility is tied into how much entitlement you'll get, you see. We're going to then go in and look at the UK government gateway system. It's a really nice unified government system. I'll explain how you register on that, how you check your national insurance contributions if you've not already managed to do that. For some people who've been outside of the UK for a long time, it can be quite tricky getting access. So I can give you some tips on that too. And then we're going to cover what are voluntary contributions, why the voluntary contributions are a really good thing to do if you're working and living overseas. And then the hot topic, which is backdated contributions, and what are the rules going to be post. It was going to be 6th of April. That's been shifted. There's been a huge backlog in processing applications to top up at HMRC. I think more to save face and you know, to maintain public opinion, they basically announced last week that they're going to push this deadline to the 31st of July. So it gives us all a bit more time, but really this is the last opportunity because there's such a backlog that it's taking them months to respond. Then we'll talk about, okay, what do you need to do to contribute, how you can contribute to make your backdated contributions, and how you can contribute if you wish to going forwards. Okay, and then if we have time at the end, we'll take some questions, and we'll see how we get on. I hope we can wrap things up in terms of going through the you know, everything in the agenda here in about 30 minutes, and then probably we'll spend maybe 10 minutes, 15 minutes covering people's questions. But as I say, we will be contacting everybody wherever you are in the world, and we will be getting in touch and offering you the opportunity to have a one-to-one session with a local financial advisor. I've invited a lot of my clients. I know many of my colleagues have invited many of their clients. There's also a lot of people who've been introduced to this through various different marketing campaigns and marketing outreach. So I'll just give you, if you're not already working with us, I'll give you a brief introduction to who Holborn Assets are. Now, we're an independent financial planning consultancy based, originally founded in the UAE, but we're global. We've been running for many, many years. We've got a great track record. We now have 15 international offices in 12 countries. We also have offices in the UK, where we have the UK Financial Conduct Authority regulatory license and the permissions there. We've recently got the Dubai Financial Services Authority license, so that's a massive plus that we've just managed to attain. We're servicing approximately 20,000 clients around the world. We're everywhere, literally, from from the Americas right the way across to Far East and everywhere between. One thing that I'm quite proud of, and I think Holborn are very proud of, is we've just surpassed 2,000 positive reviews on Trustpilot, which is a rating site. And these are genuine reviews. You can go and review client feedback and check out people's experience. And we've been the winner of the awards in our industry for client service for many years. So we're a leader in our business. We're heavily regulated, and we have a wealth of experience we can hopefully share with you. Now, who am I? I'll just give you a very brief insight. My full name is Stephen James Mitchell. I'm an MBA. I've got the certifications to offer financial advice, both the UK certifications and the international certifications. And I've been working in financial services ever since I left school and went into Barclays Bank. And I've been out in the Middle East now for 15 years, but also I worked in the Far East. So that's my background. My particular field of expertise is on pensions and tax advice. So this is really something I'm quite passionate about, and hopefully I'm the person that can help you and answer your questions and set you in the right direction here. Let's talk about the state pension. Now, one thing I want to just make very clear at the outset is that the state pension is not a savings plan, if you like. You're not paying and investing or building your own pension pot. When you're contributing to your state pension, you're buying yourself eligibility. Well, let's say when you're paying your national insurance contribution, so let's say you're buying eligibility to receive a state pension from a certain date in the future. Now, unless you're retiring before 2026, your retirement age will be age 67. That may increase again, okay? So this is not guaranteed, but basically what is guaranteed is that when you are at state pension age, then you will receive a retirement income, and that income will be index linked, and you will receive that for the rest of your life. So what you will do is, if you're buying, if you're paying into your contributions for a year, you'll buy yourself 1 year's worth of entitlement in the future. And we'll talk about in a moment the eligibility and how that entitlement, how your contributions affect your entitlement. Now, the state pension today is £185.15 a week. So obviously, this isn't enough to retire on. I put some tools at the end of this presentation, and I'll be sharing this with you. It's got all the links to all the forms and the tools and everything else so that you can play around with and experiment and test and things like that. But one of these tools is it links through to basically the Office of National Statistics. It's got the cost of living, so you can see what the cost of living in the UK is. The average cost of living. State pension's barely going to pay your utility bills, but receiving it is obviously something that is nice and certain and index linked and secured by the British government. So it's a nice thing to have, but certainly it's never going to fund someone's retirement in the 21st century if they want to have a reasonable standard of living. Okay. Now, this year, there's a big increase in the state pension. It's linked to inflation. There were 3 factors that they use to calculate, and they use the higher of the 3 factors. So it's either salary increases, the cost of living increases, that they use the consumer price index, or they increase it by 2.5%. So it's whichever is the greater amount. So this year, the state pension has seen an increase of, well, it will see an increase of 10.1%. So it's a big increase on state pension benefits. But I mean, we're still just only pushing over the £200 a week level. So still, we're not talking big bucks here. Now, if we talk about eligibility, assuming you are basically retiring after, that should say 2026, not 2016. So ignore the typo there. If you're going to retire after 2026, the new state pension will apply. And the first thing relating to the new state pension that's very important, especially if you've been an expat overseas for many, many years, or you're not even from the UK, but you worked in the UK and you paid into the state pension for a period of time, unless you paid 10 years of contributions, you'll get nothing at all. So if you paid for 9 years, 11 months, and you haven't paid that 10th full year, you will actually forego your state pension. So this is the first minimum criteria that they introduced. The next thing was that they increased the number of years of contributions that are required to receive your full state pension. So that was 30 years, it's jumped up to 35 years now. So this means that you have 35 years of working life to make contributions, and if you pay all your 35 years, you would receive your full state pension at state pension age. Now, assuming you've not paid the full 35 years, it's very simple to calculate what your entitlement would be. If you have any difficulties with this, you can do this on your, your government website, your government gateway website login, but it's really dead simple. All you do is you take whatever the state pension is in any one particular year. So this year it's 9,628. You divide that by 35 years. So effectively, each year is worth £275. And then you times that by the number of years of contributions that you've paid. And it's 4 years. Unfortunately, you've only paid part of a year, that doesn't count. So if in the example here, you paid 20 years of contributions by the retirement age, then you will take, let's say you're, for argument's sake, you're retiring this year and this year is after 2026, then you will basically take your 9,628, divide it by 35, multiply it by 20, and you'll end up with receiving a state pension of £5,502 per year going forward. So hopefully that is clear. But of course, we can cover this with you if you're not quite sure about something. Now, I'm going to move on now and just give you a quick look at how you check your national insurance record. Now, I know that many of the people here tonight have already done this because I've actually spoken to many of you before I've invited you, and also because I've seen some of the questions that were raised in the pre-webinar question field. So if you've done this, perfect, but if you haven't done this, your first port of call is to go onto gov.uk website. The website isn't the easiest to navigate, so I've put the link here at the bottom of this email, at the bottom of this presentation. So you'll receive this from me tomorrow. You'll just click this link. It's going to take you right through to exactly where you need to go on the portal to log in. Okay. So let me just go back to my presentation. Hopefully you can see, because I'm sharing my entire screen and not just this screen. Yes, I am. All right. So let's when you reach this, obviously, if you've already got a government gateway login, you'll just be able to go straight in and see your contributions and see what years you've missed and everything else. You can project your state pension entitlement. You can even go so far as to actually check and go forward and inquire about topping up. However, assuming you've not, you're going to need to register. Now, a lot of people are not sure if they've registered or not, but this is the same website where for the last few years you'd need to use to register a birth, to request a new driving license, to get your passport renewed. So hopefully you've got it. But if you haven't, you will need to register. And when you register, you're going to be asked for usually 3 out of these 4 things as a way of verifying your identity. So the issue some people have if they've got very little footprint in the UK nowadays is that sometimes they don't have the answers to these questions. If you don't, that does not mean you can't do this. It just means that we have to apply manually in order to find out what contributions you've missed and what you need to do to top up. Okay, so again, don't freak out if you can't access this. Many people struggle, especially if they're expats for a long time. But if you can, then you'll just go through, you'll register, you'll need to do like an OTP kind of verification, and then you're going to be able to come in and check your national insurance record. So hopefully you're following me so far. Once you get in, you can see here, this is a screenshot I've taken of somebody else's record. You've got 12 years of full contributions. Now this particular person has 26 years to be able to contribute before their retirement age. And they have 14 years where they did not contribute enough. Now, if you see below, it shows you, look, 2020, 2022, doesn't have it yet, 2021, it's not paid in full, 2020 is not paid in full. If you click on any of those, then you're going to see this, okay? This will tell you what would be the voluntary contribution to top up that year, and then it gives you the link on how to top up and what to do next. All right. Now, do not go ahead and do that if you are an expat working overseas, and I'll explain why in just a moment. Okay. But basically, if you are overseas, you will be able to make voluntary contributions to make up these years. Okay, there are 4 classes of contributions. The only ones that are applicable are class 2, and this is if you're employed or self-employed overseas, or class 3 if you're anyone else. So that's if perhaps you're a spouse who's not working, you're a freelancer who's not got any type of contract or any sort of proof of employment or self-employment or whatever. You might be semi-retired or an investor who's living off investment income. Okay, so these are the 2 classes of national insurance that you can make, and all the tables on what how much you pay and everything else, which obviously changes over the years, are on that portal. Now, I just want to show you something here, so hopefully you can follow me, because this is, I think, going to demonstrate financially the benefit of contributing to your state pension when you're overseas. So I'm using this. This is just some website where you can basically pop in your salary, and it will calculate what your tax and national insurance contribution should be. So let's assume that I'm living and working in the UK and my salary is £50,000 per year, for instance. Okay, if I go to calculate here, we got some kind of pop-up. What's this? So let's say what the calculation is. Right, so let's assume I'm working in the UK under PAYE and I'm earning £50,000 a year. My taxable income would be 37,430. The tax that I would need to pay on that income is 7,486, and my national insurance contributions are 4,491. Okay, now this link's embedded in the site, so you can test this with any type of, like salary that you want to test. But this is deducted at source. You've got no say over whether or not you're going to pay this. Your employer is going to, basically, take this out of your salary before you even get paid it, and you're paying, almost 10% of your income in national insurance contributions just to get that 1 year of entitlement, which, as we said, is worth a measly 275 quid, right? So, this is why when I first became an expat and people were talking to me about topping up my national insurance, I thought, well, why would I want to do that? That's ridiculous. I don't need a state pension. I'll just save the money and, invest it somewhere else or something. But let me demonstrate further what the power of being an expat is in terms of class 2 and class 3 contributions. Okay, so let me just move on in a moment, but okay, just on the, I just want to just clarify one thing. How do you know whether you pay the class 2 or the class 3 contributions? I'm going to cover that exactly right now. So if either you're employed or self-employed overseas, okay, you are able to pay the class 2 contributions, and as long as you were ordinarily employed for a minimum of 3 years beforehand, or ordinarily self-employed, then you're going to be eligible to do this. So basically, you spent 3 years, paid 3 years of contributions under PAYE in the UK at any time in the past, and then you became an expat. And now you're an expat in an expat job and you're working overseas. This means you qualify for class 2. How much is class 2? Well, the voluntary contribution for class 2 is £3.15 a week. Okay, that's a week, £3.15. That's, I think, £163 a year. So bearing in mind that guy who's earning 50 grand a year is paying like almost 10% or 4.5 grand a year in state pension contributions deducted at source. Okay, his expat counterpart can get away with just paying £163 something a year. Okay, and that's going to go up. Oh yeah, there's cost of living increases, state pensions going up 2023, 2024 tax year. Wow, it's going up by a massive 30 pence to £3.45 a week. So this is the no-brainer part of it. And I'll demonstrate a bit more about this in a moment. Now, assuming you're not eligible for the class 2, okay, that means that you're anyone who's not, either you were basically not ordinarily employed or self-employed in the UK for a minimum of 3 years, or you're not working overseas on an employed or self-employed basis, then you're going to be a class 3 voluntary contributions person. So that means you would need to pay, it's £15.85 a week, 800 and something odd pound a year, going up to £17.45 a week. Is this expensive compared to class 2? Obviously, if you can play class 2, then fantastic. However, bear in mind that this is buying you an entitlement which is worth £275 a year, which is index linked from today for the rest of your life. So by the time you even retire, that's going to be a lot more than £275, hopefully, if your retirement's not too far away, not too close. And even if you're going to retire soon, well, you still, assuming you're retiring this year, for instance, as long as you live for more than 3 and a bit years, you're going to break even. So it's still worth doing if you can afford to, although it is more expensive. But it's still way, way less than you pay in the UK if you were living and working in the UK. Now, oddly enough, and I've never managed to get my head around this, if you're eligible for class 2, you actually are entitled to more benefits from your national insurance contributions than you are if you pay class 3. I have no idea why. You'd think that the more you pay, the more benefits you get. However, if you're paying class 2, you're also entitled to things like your job seekers allowance, income support or incapacity benefit, and I think this is what they call attendance allowance and bereavement benefits and things like that. So it is really, you know, a benefit to pay the class 2 contributions, if you like. Okay, so basically we're saying that you can buy yourself an income which is worth £275 a year today, which is going to go up every year with inflation or whatever, for just £163. So you can see obviously why the HMRC right now are completely inundated with people wanting to backdate from all over the world and even in the UK, because it's an absolute no-brainer. Now, we've covered a lot of this, so I'm gonna skip to the next page. So this is just to give you a working example and talk about backdating and why backdating is also a good idea. Okay, so on the 6th of March, HMRC, they released a memo. The link to it is here, so you can read it yourself if you want to do your own background research. I put all the links in this here. I think it was more a saving face type exercise. I mean, we've been putting in we knew this deadline was coming for a long time. So I've been talking to people about this since, you know, probably the middle part of last year, and so have my colleagues. And, you know, I have people that have been applying in October, November, December time that still not even had an acknowledgement from HMRC yet. And we're in March and the tax year's starting in April. So, you know, I think the backlash from the public, if HMRC had not extended this, would have been quite severe. So anyway, this deadline to be able to backdate your contributions is coming into force now on the 31st of July. And it's quite significant. It is actually, I think it was calculated that £275, okay, over 20 years equates basically to £55,000 of contributions that you effectively could potentially, hang on, I'm getting it wrong here. So basically for for 10 years of contributions that you'd lose out on if you don't backdate by this deadline, you would lose out on the equivalent of £55,000 of state pension over the course of your lifetime in today's money. So that's a massive amount to lose out on for just a small amount of contribution to make now. So I'm going to give you an example, but effectively what happens today is that you can, if you want to backdate your contributions to 2006, okay? So you can effectively backdate 16 years worth of contributions. If you have missed contributions from before that, unfortunately, you can do nothing. However, of course, if you want to, you can continue and make future contributions. So if you still want to get the state pension the full 35 years, backdating 16 years plus paying going forward will probably get you all or most of the way there. Certainly for most of the people I'm talking to, it's enough. So what will change is effectively from what was supposed to be 6th of April, they were going to limit this backdating to 6 years. So anything prior to 6 years, you'd forego. Basically, you would never be able to make up those missed contributions. Now, actually, this was the case for a very long time. It was only in 2020 that they actually increased this back to 2006. So it was just a temporary thing that them opening them up. So we are, we are kind of at the end now of this sort of once in a lifetime opportunity to be able to, if you're someone like me who's been overseas for 15 years, backdate contributions for a lot of the time when you've been away, if not all of it. And start paying going forward under class 2, hopefully. So look, let's give you that example. This person who'd missed 12 years of contributions, assuming they have to pay 12 years at £3.15 a week, they need to pay a lump sum, ideally as soon as possible, of £1,965. Okay, so that's what they need to part with in order to secure those 12 years. Now, in today's money, that 12 years worth of entitlement at £275 a week would be worth £3,300 per year. Okay, so you bought your 12 years of contributions for 1,965. In the first year alone, you're £1,400 odd in the black. Okay, now you will get that every single year for the rest of your life, and it will be index linked with the cost of living. So assuming that you were to live for 20 years after retirement, that £1,965 of contributions today would be worth £66,000 in income, and a lot more than that if you're going to retire many years in the future, of course. So hopefully this is understood. And this is the key reason for doing this and why we're putting a lot of emphasis into running these webinars and just really educating people on this, because it's a very, very important thing to do if you have the opportunity to do it. Okay, I think I just lost the camera for a second. Let me just see if it, hold on. Okay. Okay, we're back on, good. So how do you pay these contributions then? What's the process? Now, I mentioned earlier that if you already have access to the government gateway system, the default option that you'll be presented with, because this system does not know that you're an expat living overseas and you're eligible maybe for class 2 contributions. So you're going to be presented with the option to backdate using the class 3 contributions, which is what you'd have if you were UK resident right now. So you obviously don't want to do this. If you want to, I mean, there's no way you would pay £800 and odd when you can just get away with paying £163 to make up 1 year's worth of contributions. So we need to do things the manual way. And the way to do this is to basically get this form called a NI38, which again is linked to this webinar presentation, which you'll all be shared with. Okay. And basically, you'd need to just complete that and send that off to HMRC. It's a massive form, okay? But the only 2 pages that you need to complete are just the last 2 pages. So it's really dead simple to complete, although, people have certain questions about what they should put in and things like that, or they feel perhaps they should maybe withhold certain information from HMRC. This is nothing to do with you paying tax in the UK. It's nothing whatsoever with you being a resident for tax purposes. Okay, so whether or not you pay income tax on anything in the UK or you're completely detached from the UK for tax purposes has got absolutely no bearing whatsoever on you being able to contribute to national insurance and top up your state pension. So do not worry about that. You don't have to state anything about your income or anything like that here. You just have to basically give the details of the employer that you're with overseas, your last employer in the UK, your national insurance number, how long you were working in the UK, how long you've been offshore, and an address, basically. Okay. Now, there is an address where you would send this to. The last thing you want to do is just pop this in the post with a stamp on, hoping HMRC are going to get it and somehow get it into their system and process this and everything else in a timely fashion. So I would recommend that if you're going to go at this alone and there are options for appointing an agent to do this, and we can assist you with that, Holborn. We've got a number of tax advisors that are based in the UK, or chartered accountants that you can nominate as your proxy with HMRC, and they'll do this. Okay, but you can do this very simply yourself by just completing the form and sending it by courier or recorded delivery. And also, I don't expect HMRC to write to you overseas and you get the response in a timely fashion. So if you do happen to have a UK address you can use for correspondence, again, you may want to use that on this form, or even if it's like a family member or something. Okay, it's got nothing to do with you saying that you're living in the UK, nothing to do with your tax situation or anything else. And in fact, if you are overseas, but let's say you've got UK properties and you're doing the self-assessment, you can actually pay your NI contributions through the self-assessment if you want to. Okay, now this there is a direct debit mandate on the bottom of this. Now probably a lot of people, unless they happen to keep UK bank accounts, will not have access to this direct debit system. Okay, so what I suggest that you do if you're not going that route is just tick the box to say you'll make annual payments and just pay by bank transfer once a year, and you can obviously pay that then from anywhere in the world. Okay, so once you send this, then you'll receive that acknowledgement. That acknowledgement will tell you what contributions you've missed, if any. Maybe you just want to continue paying going forward, of course. There's nothing, by the way, to say that you have to backdate your contributions. A lot of people, they don't feel the need to, because they still have a long working life ahead of them and plenty of years to catch up. Okay, so once HMRC have acknowledged, then you can obviously then make the payment arrangements as you see fit. Okay, but most of the international banks that you use, I mean, where I am in Dubai, they've just started having a direct system locally, but you can't make you can't set up a direct debit to the UK. So just leave that bit blank and tick the bit to say you want to just pay it annually, and you can do it that way. So we've covered off pretty much how to basically find out what years of contributions you missed, how many years you need to get the full state pension. So you should have an idea in your mind as to whether or not, if you're going to backdate, it's achievable from now going forward to get the full state pension. If of course you want the state pension, if the full state pension, maybe you don't need the full state pension, but you just want a state pension. And if you're on, say, 8 years or 6 years, of course, you're going to want to just pay that small number of years to top up, and then maybe you can just pay going forward at whatever the annual contribution rate is. So hopefully all of that is clear. Now, as I mentioned earlier on, everyone who's attending this is going to receive a copy of the recording, the presentation itself. All the links are embedded here, and they're going to receive a call from whoever their local advisor is in their particular country. I know we've got people joining from, I saw some guys in Thailand and Singapore. I think it's 4 hours ahead there, so it's very late for you guys. So thanks for sort of staying up and attending. Yeah, your local Holborn office will be in touch with you, and they'll book you in for a quick one-to-one session with an advisor to basically guide you through this and answer any questions you've got. I think that would be best for everybody, really, if they want to take advantage of that. And there's no fee for this initial consultation, and hopefully we can give you a clear path on steps to go. You ideally want to, if you've been putting this on the back burner and not getting around to it, I say it's now or never, realistically. So I will be doing a couple more of these webinars over the coming weeks, but I mean, we literally have been granted this last minute grace period. We've only got till July, but with the backlog they've got, I mean, it's still questionable whether you're going to be able to get in there on time or not if you do apply today. So I would strongly urge you to do that. Before we go, okay, there is one thing I want to cover too, because I'm an expat and I'm a financial advisor. I've been here a long time, and you know, a lot of people, they're not only not contributing to the state pension, a lot of people are not contributing to any pension whatsoever, or any type of retirement. And this is something that is, I'd say, endemic here, and probably in many places around the world where expats live. We are not forced here, or we're not usually sort of put into company schemes or whatever. We're missing out if we're not contributing for our retirement. And I've spoke to many expats over the years that have been going back, and they've been here like 5 years, 10 years, 15 years. And they're asking me, when I go back, my friends that, used to be so far behind me, they're now way ahead of me in terms of their financial stability. They paid their mortgages off. They're way ahead on their retirement planning. For some reason, as expats, we do tend to procrastinate these things. It's essential you do not. Okay, the state pension, even if you make the contributions, is peanuts. Let's face it. Okay, I put these calculators on this screen so that you can check the Office of National Statistics and see what the average cost of living is. You can obviously gauge that maybe in different parts of the world too. If you're planning to retire, for instance, in Spain, or like me, I'm hoping to retire in Italy. I've got a good idea of what my living costs will be there. These tools, this cost of living and calculator, this will help you really comprehensively understand what your living costs will be today. And then you can plug in that living cost into this retirement calculator link here, and it will tell you, based on where you are today financially, what savings you've got, what pensions you've got from the past, everything else, and whether you're on track or off track. And if you're off track, what you need to do, how far short you are. Now, as financial advisors, we do this with all of our clients. It's an essential part of financial planning. For most people, retirement is the most expensive thing they're ever going to have to save for. So, I mean, people look at it and think, okay, well, it's years away. But I mean, and again, we're talking retirement now. It's not, we're talking about you being an RAP and, we're talking about having enough money, having enough wealth to be able to generate a residual income for yourself, to be able to stop working when you want to, or when you have to, because medically you can't, or career-wise you can no longer continue. So it's essential. So I put some top tips here, I'd say, about where to start here with retirement planning. Start small, contribute small amounts in the beginning, contribute regularly, pay yourself first. Everyone always says that. You shouldn't, you should earmark a tranche of money every single month if you receive a salary, or every time you get some income. Say, right, 10% of what I'm getting from this project or whatever, this is going for my future, and forget about it. Now, if you need to dip into it, then so be it. But you need to build this discipline of regular saving, and when you do that, it will become a habit. And you have to think long term, and just don't procrastinate, because the closer it gets, the more scary it becomes. And when things get scary, what do human beings do? What's in our human nature? We procrastinate even more. So, what you'll find is, just by starting small and developing that discipline, that you'll very soon be developing that mindset where, you're moving ahead, you're moving in the right direction, and it's achievable and you can do it. So that's it for today. I really appreciate everybody's time. We got this is the Q&A session. So I've got some questions in the chat here. Let me see what's here. Okay, so Lee's asked a question about transferring the money from overseas. Hopefully we covered that. Hopefully it's clear about who's eligible for class 2 contributions and who's not. Now, a lot of people still go away in disbelief that they can get away with paying so little. I am still in disbelief, but in this presentation, you'll get the link. You can go and you can check, and it clearly says that if you're working overseas and you paid into state pension for 3 years before moving overseas, you're eligible for class 2. So fantastic. There is an anonymous attendee who's asking if it's possible to draw your state pension as an expat at 67, yeah, you can draw your state pension anywhere in the world. So that's the beauty of this. I mean, you could have done your 3 years just after leaving school and then moved overseas, been employed overseas your whole entire working life. And as a British national who's made those 3 years of NI contributions at the beginning, you're entitled to the state pension at retirement age, irrespective of where you live. However, there's one caveat, and that is that in a lot of countries around the world where they don't have some agreement in social security with the UK, so this is most of the places outside the EU, but some of the Commonwealth countries, they are covered. Okay, but let's say we're talking about UAE. Let's say I'm going to retire in the UAE, for instance. All right, my state pension will be fixed at the state pension, at whatever the state pension is at my retirement age for the rest of my life. So if I'm an expat outside of one of these nations where there's this social security agreement, okay, then I will not get cost of living increases. So if, let's say in 20 years time, when I retire, for instance, the state pension at that age is worth, let's say £20,000 a year, then I'm going to get £20,000 a year forever. But everyone who's living in the UK or one of those member states or whatever, they will receive £20,000 a year plus cost of living increases every single year. So this is one fundamental difference. But you'll get it, you can take it, and there's even forms on the HMRC website that you'll complete. And actually, on the links that I've sent you, go through to this pension centre. The forms are there as well. What you need, how you claim your state pension from overseas. So it's all very clear, easy to do. Again, you know, probably you'll elect to have it paid like quarterly or biannually or annually, not every single, you know, week, because you know, unless you have a UK account and you just want to receive it and have that well up in the UK and then move it overseas in tranches, it would just not be it would not be very efficient. But yeah, definitely. So let's move on, see if there's any more questions here. Okay, so we've got a question from Joseph. If you are not British and not planning to retire in the UK, is it worth topping up? Yeah, so it definitely is. So let's say in this case, you've got the 12 years of contributions, Joseph. So you worked in the UK before. You have contributed obviously for the 3 years before, so that's okay. So it is worthwhile you topping up, but you're obviously, like everything that I just said about your state pension being capped at retirement will be determined at your state pension age, depending on where you live. So hopefully that's clear. Okay. How long is it? I mean, look, the whole process probably end to end. Someone's asking how long the whole process will be. Honestly, I can't tell you right now. All right. It used to be that from end to end, under typical circumstances, the process of doing this would be maybe 3 months. Then COVID happened. HMRC, you know, the department responsible for this got heavily behind. They've never really caught up, and now, you know, things have gotten a lot worse because there's a huge surge in people wishing to pay voluntary contributions. So I would say that, like, your key priority, if you're looking to do this, is to get your application in and get it acknowledged from HMRC. Once that's done, and as long as you do that within this time period, you're safe. Even if, and this grace period as well, by the way, even though it goes over into the new, what would be the new state pension contribution rate, which is like £3.45 or £17.45, I think, £17.25 from 2023-2024 tax year. This grace period allows you to pay it at the current rate, 2022 to 2023. So you don't even have to pay the increases at the moment. Okay. So so there's a question from Viola about whether it's possible to claim back your national insurance contributions if you fall short of the 10 years. The answer is categorically no, unfortunately. Now, your contributions or national insurance actually pays for people today to claim their state pension. You're only buying years of entitlement in the future. So they have no monetary value. It's not like your pot of money that you may forego or not access, unfortunately. So that is a definite no. If you don't top up and you pay less than 10 years, you're going to lose all of your, let's say you pay 9 years, you'll lose the 9 years of contributions. I've got a question from David here, who is David is asking. He's saying that it's telling me that I need to contribute £800 plus for each year. David, this is because you're logging into the Government Gateway portal, and Government Gateway portal does not know you're an expat working overseas in the NI portal. So you're getting showed the default, which is what you would pay if you're in the UK. But as an expat working overseas, ignore that. Don't go ahead and do it via the portal. You have to do it this manual way. So you have to elect to pay class 2 contributions via that the NI38 and the little attachment at the end, which is called the CF83. And my colleagues, when they follow up with you afterwards, will settle that for you and show you exactly what to do there, so you know. But don't, if you're entitled to play class 2, do not go ahead and play class 3 contributions. Go for the class 2 because it's a lot cheaper. Now, I've got another question about maybe requests might not be accepted even if we submit now. Do we need an acknowledgement? The answer is we don't know 100%. Okay, the people we're working with as the proxy. So I mentioned earlier, we're working with chartered accountants and tax advisors in the UK. We've got a network of these guys that we employ to help our clients do these things. Their consensus is that as long as they've got the proof that the application was received by HMRC prior to the deadline, then from their standing point, they believe that that is going to be acceptable, which is why I would urge you, if you're going to do this, to send this off via a courier service and get an acknowledgement of the delivery. So although you're not receiving the HMRC official letter to say, yeah, we've received your application and this is your backlog and this is what you need to pay and XYZ, you can still obviously prove that you applied before the deadline. So that hopefully covers everything. We've got one more question here. It's about, sorry, I've lost it a second. Okay, so UK rental properties. So there's a question about having UK rental properties. I raised this point earlier on, and if you are renting out your UK properties and you're doing self-assessment, you can do this via the self-assessment. So you can pay via self-assessment. You can't request to get the the statement, if you like, of your missed years worth of contributions. But if you have access to Government Gateway, which probably if you are doing the self-assessment you've got, I would assume, unless you're paying some accountancy firm or something to do it for you, then you're going to be able to check via Government Gateway anyway. So that is the ideal situation for you. If you've got Government Gateway access, you'll know exactly what contributions you made. You'll fill out your self-assessment and your obviously the state that you want to pay national insurance contributions for this tax year, and you want to pay for the previous tax years you've missed back to whatever date you want to, or you can. The maximum you can backdate is to 2006, of course. And then, of course, you can pay them every year going forward. So you can pay annual payments every year going in. This also is, paying going forward, if you're not doing self-assessment, would be done via this same application. So all you will do when you complete this NI 38 or CF 83 attachment is leave the direct debit mandate, unless you will be paying by direct debit from the UK, in which case, your future contributions will be deducted anyway on direct debit basis. So if that's not the case, then you'll just tick the box to say you'll pay annually, and you can do that. There's various different ways to do it. You can pay check and things like that, but obviously for a lot of people, if they've got overseas bank accounts, they'll just pay by bank transfer. By the way, we can help anyone if they want to, if they've not got UK accounts, to set up a UK offshore account in Jersey, Guernsey, or the Isle of Man. So your financial advisor can talk to you about this if you want to have a chat with them. And it's really simple. It takes a little bit of time, but it's quite low, low paperwork. But it takes a while for them to actually set up these accounts, because they have to do their due diligence tests and things. But once it's set up, you've got an offshore account outside the UAE taxation system and everything else. However, these jurisdictions still use what is the BACS, the banking system in the UK, so you can set up your direct debit from those accounts, no problem. Okay, let me see if we have any more questions now. We seem to be getting more questions. Michael's just asked if it's recorded yet, but it's recorded. We're going to be sharing the video with anyone who wants to see it. It's going to be actually posted on our YouTube channel. And the presentation has a bunch of links and tools and things like that all connected to it. So you'll receive this from your local agent or advisor probably in 24 to 48 hours. I'll be sharing this with everyone in the morning. Okay. Now, again, there's another question about government gateway showing class 3. Yes, it's true. So just ignore it. Okay. As long as you're eligible to pay class 2, you can do, but it's not the default option. So don't, you only need to access the government gateway to check your missed contributions. Don't use it to go ahead and actually do the backdating, because you'll only be able to choose class 3. And probably if you're an expat and you've got a job overseas or you're self-employed overseas, you're going to be eligible for class 2. So you don't want to go ahead and pay the class 3 contributions unnecessarily, because they're 5 times the price of the class 2 contributions. So yeah, hopefully that answers that one. Is the government so Viola again is asking another question about, is the government gateway the way of communication after the application is received? No. Okay. It's absolutely a nightmare. There are some phone numbers I can share with everybody where you can call, but the waiting time is like eye-watering. There is inside the government gateway like a messaging sort of chat service you can use, where you can submit an inquiry, and it says they'll get back to you within 14 working days or something like that. So you can use this to raise questions or concerns or follow up perhaps, but they don't communicate anything on the government gateway portal, unfortunately. I wish they did. It would be very, very simple if that was the case. So usually, we have to keep, or you have to keep following up with them to check on the status. But at the end of the day, right now, we're in sort of an unprecedented situation. So when this situation normalizes, it should be very simple going forward. It's just this kind of situation right now where there's a bit of a crisis going on, and that's causing these communication issues with HMRC, NI, department. Now, Craig has asked again what the minimum number of years were for the full state pension. Assuming you're retiring after 2026 is 35 years. Okay, so anything less than that, you just pay pro rata based on the numbers of full years contributions you made. So 20 years of contributions would be basically whatever the state pension is divided by 35, which is the total number of years you could pay, times by 20, which is the number of years you can pay. Hopefully that makes sense. So it's do HMRC use email contact after sending in the CF83? The answer is not normally no. They usually communicate via post, which is why it's quite good if you can use a UK address, your sister's place, your parents' place, your friend's place, whatever, to receive that letter, or appoint a proxy to do it for you. Got a question here from John. Okay, I'm paying class 3 and I know the total amount for the backdated payments. Do I just make the payments with my NI number as a reference? Do I need any confirmations from HMRC? Technically, no, you don't need a confirmation, because as long as you've got access to the website and you can see how many you've missed, you can just go ahead and make them. Okay, John, so you should be all right there. That shouldn't be any problem. If you're under a self-assessment, you can put this in the comments or something there too, just to specify that this is what that payment's for, just to avoid any type of ambiguity. There's another question here. Please share details of tax specialists. Well, around the world, we have in-house tax specialists, or we've got local agents on the ground that we work with. It depends where you are. So when we contact you, we'll share this information for you based on where you are. I know we've got people, I saw the attendee list, there's people all over Europe attending. We've got loads of people from this part of the world where I am, and Far East even. So look, we will give you the relevant contact details based on where you are and your specific requirements, and obviously what you need help with. Okay, and that goes anyway as well for if you want to do the self-assessment. If you are a non-resident landlord, but you've not, maybe you've not completed the paperwork correctly, so you're paying tax unnecessarily. It's deducted at source at the highest marginal rate, rather than it being it being paid out gross, and then you're paying under self-assessment, which obviously would be better in most cases. If you're a Brit or European national, that means you can use your personal allowance. These are massive benefits. A lot of people can, avoid quite a large amount of the tax they pay under, the non-resident landlord scheme, and they're totally oblivious to the fact that it even exists. So our guys can talk to you about that. This is something I have particular expertise into. Let's see what else we've got here. Any other questions? We're going to wrap up, I think. We're at 8 o'clock, so we're at the hour mark. I think we'll call it a night in a minute. Okay. So I've got a question here. What a ballpark figure to complete the process? I assume you're talking about somebody acting as your agent and completing it on your behalf. Ballpark figure for most of the people that we're using, anything between £300 to £500 plus VAT probably, but just it depends on who you use, where you are, if there's any other requirements that need to be done or looked at. So this is we'll talk about that offline, because our representative, after they've kind of given you a bit of consultation and guided you through it, if you need that service, can put you in touch with somebody like locally. If that agent is external to Holborn, it's down to them to share their engagement letter or terms of business with you, and then it's up to you if you want to accept them and appoint them or not. That's your business. Okay. Do you need to do it? No, I think most people can manage to do it on their own, but if you don't want the headache, then by all means, it's something we can help. I think we've got, that's hopefully all the questions. Unfortunately, I think their mics are defaulted, so they can't actually ask questions. So you had to put them in the box. One final question from Matthew I'm going to answer now is to do with the earliest year you can contribute to. Yeah, 2006 tax year. Okay, so you can backdate 16 years of contributions at the moment, and that will be reduced by 10 years to 6 years of contributions after this deadline, hence the rush. Okay, that's it, guys. I see that we've got the majority of people that joined at the beginning are still on at the end, so I really hope that it's been beneficial to everyone. There are a load of different services that we can assist you with, but let's crack this one first because it is very important, and there's quite a short-term quite a short-term deadline on this, and we're at your service. So reach out to whoever you're working with locally or whoever it is who gets in touch with you, and we'll assist you the best we can. Thank you so much, everyone, for attending. I hope you found it useful, and have a great evening or afternoon, wherever you are in the world. Thank you.